Time to get you a fundamental view on the market from G. Chokalingam, Executive Director and Chief Investment Officer at Centrum Wealth Management. Hi Chokalingam, thanks for joining us right here on ET Now. Firstly, your call on the sugar space that seems to be in focus today on the back of news that the government could look at possible decontrol. This has been talked about for a while now. How would you advise investors to play the sugar space?
There are two issues involved in this. One, even decontrol is not going to help the sugar pack to improve the fundamentals in the short term. It will take a much longer period for them to adjust to the new decontrol regime and start realizing the benefit out of that. And secondly, right now the international global prices are, sugar prices are substantially low. In fact, almost a 2-year low. Even on the domestic front, we have seen significant correction of the sugar price in the last 2 months. And therefore, I would suggest not to play on sugar pack in the short term. Only one can play on medium to long term on the sugar stocks in the country. And within the sugar pack, one should be very, very cautious and choose only the least leveraged sugar companies and also the companies with a very high recovery rate. And in my view, such companies are available in the state of Andhra Pradesh. So one should focus on just 1 or 2 stocks. Basically located in Andhra, where the recovery rate is as much as 10%, and many of them are least leveraged. So otherwise, I would not suggest aggressive positioning in the sugar stocks at this point in time.
Chokalingam, what did you make of the degrowth trend that we saw with Jubilant FoodWorks, and does it seem this could actually rub off to other discretionary spend stories as well?
So first of all, in my view, Jubilant Food is not a cheap stock. It's overvalued. I would strongly recommend booking profits anywhere from 1150 to 1200 range. And also one has to be tactical more than the fundamental in picking up the stock and playing on wealth creation. The point is that every second, third year, some theme is played out, and perceptions helps to build up huge PE or price to book. So one should be aware of that, and I don't think this theme would continue to play in a robust manner going forward. Market would pick up some other theme, in the near future, and then that theme would be played out in a big way. So considering the overvaluation and considering this reality of the Indian stock market, I would advise, booking profits, at around 1150 level.
How do you read into the government's move to give an in-principle okay to coal pool pricing? What kind of an impact do you see this have on power producers, and what would be your preferred picks in that space?
I am not optimistic on the power producers. I could still remain quite negative because of a lot of confusions involved in fuel supply and problems in importing fuel from Indonesia, and also the leveraging. So I would continue to stay away from the power utilities and look for opportunities elsewhere.
What, according to you, would provide the next trigger for the market? Because it seems like the positives from the budget are something that the market is already priced in.
Yeah, I am expecting 2 triggers to help the market to restore. It's a continued optimistic path. One is the DI, domestic institution selling, which should taper off very soon. Very interesting data point is that all of us know the FIIs have a major say in the market. Whenever there is a significant outflow from FIIs, it impacts the market. But this time, the domestic institutions have proved that their behavior also has a significant impact on the market. For instance, in the last calendar year, the domestic institution sales were to the tune of roughly 55% of the net inflow from the FIIs. But in the current calendar year, in fact, they have sold about 22,000 crore, which is about 90% of the net inflow from the FIIs. So in my view, their selling is pulling down the market. And second, the reason is that twice in the past when Sensex reached 21,000, then we saw substantial fall. So there is a fear factor among the investors. This time again, when it went close to 21,000, whether it would crash. And third, I firmly believe that the budget would be a trigger. And also the current earnings session, we have seen about 750 companies posting more than 30% profit growth. Ultimately, we may end up with a 20% year-on-year profit growth. That would also act as a trigger. And another very interesting data point on macro front is there are totally about 30 retailers, global retailers who have proposed to enter India. So I see great opportunity in terms of a lot of significant amount of dollar coming into the system. And all this should play out, and maybe for another 1 or 2 weeks market could be on sideways, but this could be an opportunity to pick up individual stocks. And in the next 1 or 2 months, all these triggers would play out. I remain quite optimistic that, till monsoon forecast comes in, we will not have any serious problem in the market.
All right, before we let you go, Chokalingam, a quick call on NTPC, because that's a stock to watch out for ahead of its massive offer for sale. Even though it's a huge issue, but there seems to be enough appetite for it. What's your call on the stock, though, in the medium term?
I think people should wait for the offer for sale to open, and they should do bottom fishing. Unfortunately, all the PSU stocks, they get hammered on the day of offer for sale, and it's a good buy even at current price, but tactically they can do it on the day of offer for sale, because historically it used to quote around 2.5 price to book on an average. Right now it's available at around 1.5 times FY14 book value, and even if we go back to if not to 2.5, but even if it commands about 1.7 to 1.8 times adjusted book value, the stock can give anywhere from 15 to 20%. So one should apply when the issue opens and do a bargain buy, use that opportunity and just grab the shares.
Okay, Chokalingam, good having you on the show.